Hello, everyone. Let's have a great week. Richard, how are you? Ryan's here. Mike Delfino. Mike, how are you?
Morning, Dale.
How are you?
Good. You, had a good weekend?
Pretty good. Okay. I know you guys are probably exhausted.
I'm all right. It's the other guys. It's the other guys. They must be shattered.
Yeah. All right. Well, you got S&P up there now, right, Ryan?
Yep.
Okay. So, I want to start with this and we'll go to the currencies and, pretty negative week last week. And remember, Ryan, the day that before all the Fed, Powell came in during his testimony and was super hawk. That was this day, and the way it fought its way back, and commentary that day was, any other day that Powell, on the way down would have said something like that, we would have had a big break. So I always considered this a pretty important low for the rally to continue. And now the 200-day, after what they call this the death cross, anyway, it was still alive above it, but they come in right around the same area, around that 44.22. The low that day was 44.24. If it gets through that, we could retest the wedge line, and NASDAQ acting a little worse, but can you almost visualize if it digs in its heels down here, kind of a right shoulder?
Yeah, and I think you're going to get a push to those lows again.
Yeah, and the semis look like they are going to. But let's get to the dollar and euro, Ryan. So the first hurdle, no big deal about what was expected in France to, the runoffs between Macron and Le Pen. I guess the market's probably thinking that the other groups are going to, the other parties are going to throw their support behind Macron. What are you hearing?
It's going to be a bit of a mix. Some of the parties and people, went behind Le Pen when they lost out last night. But it's largely looking that Macron's going to get through. It was just a question of how close it was going to be last night in the first round. Early polls suggested it was going to be really close, but you get like 30,000 exit polls out of France, and each one told a different story. In the end, Macron came through, but it is a runoff with Le Pen, so there's still a little bit of a risk that he doesn't win as comfortably as the market might want to see. Euro dollar, it sprung up to 109.54, which not a lot of people will probably have on their retail platforms because they weren't open then.
Okay.
But
that's where it opened last night. Okay.
Yeah, on the interbank, it ran up to 109.54. So it cracked the level in terms of the interbank market, but it doesn't look like a crack on our retail platforms.
Okay.
And it's subsequently we've held that 30 area again this morning a couple of hours ago. So it has solidified that level around that 30-40 zone again.
You're still looking for maybe one more washout here, or would you buy a pullback, or everything's going to come down to the ECB, right?
Yeah, I think there's a danger that we continue to go a bit sideways here into the ECB because there's a lot of expectation riding on it, and traders aren't going to go too far out their comfort zone with that risk ahead.
What a monster the yen is. Hats off to Cayman. Were you there too for this last run?
No, I'm not. I was at my long-term longs last week. I got caught on the pullback to 121.30. I bought all my stops up to 121.50 when it was up near 125. I thought I'd stay out of the way. At 121.50, and we hit that 121.30, knocked me out. But I'm not going to complain about it. But
most people would be still dwelling on it, Ryan, because I know I used to, dwell on things like that. The fact that you just move on is so important that you go right to next. instead of, oh, bad stop, and I would have made another, 40 grand, and dwelling in the past instead of just moving ahead and making your next move. So,
well, I'll be honest. I obviously did dwell on it a bit. When you sit on a trade, when you sit on something for 18 months, and the end happens so quickly, if you know what I mean. You do ask the questions.
We're human.
Should I have done that? But you don't dwell on it to the point where you
don't go fetal
about it. No, you think, okay, well, that's what I could have done. That's what I should have done. I didn't move on. So it's a 5-minute dwell it was.
So EG, I know that Blake talked about being long Friday. It's are you getting any message from EG the fact that we almost made new lows in Euro, and basically on this pullback we have held 61.8 so far? I mean, are you convinced there's a washout coming in? I think we'd need maybe like I don't know, 105 euro to maybe get new lows and the pound hold up.
Yeah, potentially. I'm still, like you said, I'm still a bit bearish on the euro in the short term. I don't think we're done seeing the downside. That could well come as early as the ECB, and that's going to have an impact, obviously, in euro sterling as well. I'm a bit surprised it's up, but again, there might be a little bit of the election easing there. But I didn't, as I said the other week, I didn't trust that move up in the euro. I didn't trust that in euro sterling up to 85, and I did try some little entries against the broken resistance as that move happened to 85. I thought, right, well, if this is a proper break, then the former level should hold as support, and none of them did, and we're right back down again. I'm still got a long 83 and 83.50 for a long-term build, part of what we've been saying at the beginning of this year. So I'm happy to buy it all the way down to 80 if it goes there. And if we get through 80, that's going to be an assessment point.
Okay.
So we'll see what happens. But I can see us getting another look
down there,
down the lows. Yeah.
Okay. And Stel, any feeling on the metals are flying today?
Yeah. Hey,
how are you?
A bit tired from the weekend, but all good. Metals obviously flying. I still have my core long position. Unfortunately, I got stopped out on that piece. I remember I bought at 24.01. It went up really nicely. Then it just hit my stop and left. You hate it when that happens, but you know what can you do? And still have my core position, which, I would love that to go, 10, 20, 30, 50% higher. I wouldn't complain. I have said before, if we do break, I'm going to add either way. If we do break above 26.50, or what is it, those 27, almost 27 highs, I'm adding there as well. So, obviously it's nice to have a bigger position when things start moving, but you know what? No one's perfect. No one can time things well. Definitely not me. Yep. So I'll take what I have. Now regarding the euro and the euro pound, I still think I said it from the beginning of this year. I think the euro is going to do well this year. Obviously, the Russian situation didn't help at all. But you have to, if you look at the big picture, we have the ECB, which has been ultra dovish so far and is kind of expected to be dovish, and the Ukraine invasion. So you have these two forces which have been moving against the euro. And yes, it's gone lower against the dollar and against the pound less so, but it's still holding up relatively well. As long as we're above 108 in the euro dollar, I think it's still okay. If we break below, we have to reconsider. I am starting to take a long in euro pound, just like Ryan said. I got a little bit today at 83.70, basically where we are now, and I'll be happy to get some more below if we get close to the lows. What is it, 82 something? But yeah,
respectable how it held with the dollar making new highs and the euro almost making new lows, right?
Yes. We got some bad data from the UK. GDP was less than expected. Industrial production, manufacturing production, both missed. So it's not looking too rosy on the UK side. So the thing that needs to happen now for this trade to work is for the ECB to finally get off their asses, can I say that? And do something about inflation, which is still high and rising. And we've said this so many times, the effect from Ukraine and the whole situation there is now going to start getting felt. We haven't seen it yet. So, it's going to be interesting to see what they do.
I don't think I'd short the pound down here either. I mean, just my feel. Let me ask you guys. I know it wasn't much of a reversal on Friday, but doesn't it feel like you don't want to be long any dollar positions right now? Except, U.S. dollar yen is a beast.
Yeah. I mean, you get to the other side now. What do you need to happen for the dollar to go higher? How much more can we expect from the Fed, or can we expect the market to price from the Fed? We're getting now to a point where it's quite a bit that it's a big hurdle that the Fed needs to get over, and obviously there is a risk. There is always a risk if we get some kind of big crisis, financial crisis. I don't know what. The dollar is going to get bid straight away. That's the knee-jerk reaction. We all know it happens. So in the short term, if you're long, if you short dollars, you can get really squeezed out and kiss your money goodbye that way. But I think at this time, I'm starting to feel quite bearish the dollar, and if I was long the dollar, obviously it's done very well. If I was long, I'd be very careful now. Be taking some profits and wait to see what comes next.
Knowing how your soulmate trades, you know who it is?
Who's my soulmate?
Steve. That he would wait for confirmation for a break under this triple top. I think would be a pretty good signal not to still be long the dollar, and then you have all these different levels underneath it if it turns. But it spent 2 months sideways here. So if this doesn't hold, I'd get out of the way if you're a dollar bull.
Yeah, I agree with our friend Richard, who says, I think the dollar is going to fall on Ukraine resolution. I think so too. I think the euro dollar is going to rally.
Do you guys think there is going to be a resolution? I heard General Milley say this could go on for years.
Potentially. It's got to stop somewhere, because either Putin's going to draw a line somewhere, or he's going to keep going.
This is last hurrah with this. Regrouping of forces to go in through the east. I mean, they had a 9-mile line of tanks, a new general. I think he's thrown everything at it here.
Yeah.
And Zelensky looked nervous. Be the case. Yeah. So, gosh, those poor people. Anyway, I'm sure there were some great ideas and themes at the Trader Summit, guys. So, maybe if you feel undercapitalized, right, and you've heard some things that resonate with you over the weekend, what a great time to go through an assessment period and not be handcuffed, to be able to trade it with some real money instead of being a short stop with the 5 and 10K, and where you're tempted to hit a home run ball so that you could have that type of capital to work with. Here, you just be conservative and get through the assessment, and you have it. So, a great time to consider it and move on it, especially if there was something that really resonated with you that you'd like to be there for. So, just wanted to bring that up and say good morning to Blake Morrow, if he's up today. Are you up? Okay, he's not up.
Today was the first day in a long time. I actually had to hit the snooze. Yep. I don't ever do that. It's very, very rare. And if I've done it, and today was one of those days where I actually hit the snooze button. So I want to thank everybody that was involved for the Trader Summit event. It was a really great event. Ryan's first time he did an interview, and he knocked it out of the park. So great job, Ryan.
Yeah, he was awesome, man. He was absolutely fantastic.
Yeah, I can't shine a light to you guys.
It's funny. I was talking to, I was spending time with my son, my youngest son, yesterday, and I thrive on that, because he's at that age where, I'm like, hey, you want to go do something? He's like, no. You want to do something? No. He just goes up to his room. That's just kind of the age he's at. Him and I went to the gym yesterday, and we worked out really hard. And he's like, hey, Dad, do you want to watch a movie? So we watched a movie, and we watched Snatch. And I sat there the whole time, and I'm like,
fantastic movie.
Oh, it's a fantastic movie. But I go, everybody in that movie talks just like Ryan. The whole movie, it's Ryan. It's like, because my son's like, what do you say? And I'm like, okay, let me tell you what he says. I have some experience here. No, but anyway, it was such a great movie. It was fun. But I was thinking about you last night, Ryan. What a great event.
I was thinking about you last night, Ryan.
Yeah, I don't know how to take that.
They're in the movie.
That's your cue for getting the hell out of here.
Yeah, so just shove it down my spine.
Anyway, you guys are. I don't know why your head goes in the gutter. It's straight into the gutter, Steve. Straight into the gutter.
It doesn't come out the gutter.
It never comes out of the gutter. All right. So first of all, let's talk about the euro reaction. Faded right from the open following the first round of the French election polls. Now remember, we're going in the second round. I think we got a couple of weeks, if I'm not mistaken. But
24th, yeah.
But near term, that's going to be supportive of the euro because it came out better than expected for Macron. I believe, some of the, European markets, like how's the I should have looked this morning. Look, the CAC is actually up when all the other markets are down. I mean, that's, that's just, showing you some recovery in European markets. And, you look at the euro and it rejected what we've been seeing is, pretty good resistance at the 109.40. Gapped up there and it fell immediately. Now, I wouldn't want to be short the euro down here, not ahead of the ECB. We have the ECB this week, and I think the risk is that the euro might, push up a little bit. I know, Ryan, you said a little earlier that you are looking for further some near-term US dollar or euro weakness. You don't think it's over yet. I have to admit, it is still held. It's been kind of weak recently over the last week, but it still overall is holding up very well despite everything that's happening. And with the ECB risk this week, I think the euro does pop back up above 109.50 and close to 110. But that's a biased opinion, as I am long the euro as it is right now. I heard, Dale, you were talking about the euro sterling with Ryan. I am long the euro sterling. I picked it up closer to 83 last week, and I'm playing it to the long side. As we drop down here, I am playing it with the long side because I think it's this false breakdown. You have to. I'll lean into that. As much as I can, knowing what's happening with the euro. I'll go ahead and be on the long side as long as we stay above this 83 pence level, somewhere around here. I don't mind being long. Then you look at the euro crosses too, like the euro Aussie. We're coming up to descending trend line resistance. That is a false breakdown as of right now. Euro Kiwi, we are now developing a wedge, possible small false breakdown right into resistance. So you can see it's not just hey, I'm so Blake, you're just focused so much on the euro dollar. No, I'm looking at the euro crosses, keeping them in mind. Then on top of that, you throw the euro yen in, and it is just, it's coming out of this bull flag very, very aggressively. But let's stop here for a second. I don't know if K-Man's here. I don't think he is.
He's off the next few days.
Yeah, he's tending to some personal things. What do you make of this yen up here, you guys? I mean, we have the dollar yen that is above we're above 125.50. We are nearing the highs from 2015. You can see them right here. Is it March or May? May of 2015. We're right into that resistance. What do you make of it up here? I mean, how's the BOJ and the Ministry of Finance going to feel when they get in front of their computers this morning?
Well, I think the BOJ is half the reason why we're up here again, because they came out, a lot of BOJ speakers overnight, Kuroda, coming out and basically saying, yeah, they're happy to continue easing as they're going, and in this environment where everyone else is looking to tighten, that's like saying, no, go on, you might as well jump 100 pips, because it is really the yen moving this morning. Yeah, yields are up again in the US. That's putting a bit of a tailwind in, but you look at the yen pairs and compare them to the majors. Aussie dollar's not done anything in a 40 pip range. Euro dollar's not done anything. Cable's not done anything, but Guppy, Euro yen, dollar yen are all flying high. So it's a bit of a yen story, yields, and as I say, the Bank of Japan easing to oblivion as they have been forever.
Yeah,
and I think that's the risk for Thursday. I think the ECB is a bit black and white like that as well. Either they're going to turn hawkish or they're not. And if they don't,
it's very binary in that respect.
Some meetings it's like, oh, this is going to be a boring one. There's no real decision to come from it. I think this one is going to be a hottie.
10-year making new highs, Blake. You see any place that maybe yields could stop going up?
I don't know, Dale, and after after discussing this at nauseum with all of the guests at Trader Summit, it seemed like universally most of them were like, yields are going higher, and most people are thinking, that we're going to see, the U.S. 10-year above 3%, close to 5%. It's like, It's like, I don't know. I keep looking at the bond market, and the one thing I need to point out here is if you look at here, let me reset this here. You can see this is the weekly chart on the 10-year. This is the weekly chart on the 30-year. We closed in very dangerous levels last week, and we closed the week down there. That's some scary stuff. So, that just tells me that to me, unless we see a hard reversal this week, which is possible. It's possible with some risk aversion picking up, with the ECB meeting this week. It is, and it's Good Friday. And so it's going to be a shortened trading week. Just so everybody knows, we will not be broadcasting on Friday. Just make sure everybody knows that. But what I want to say is, unless we get a hard reversal here, and see if you look at this is right here, the 30-year, and you can connect the support from 2013 lows, and this is the CBOT futures, right? So the continuous contract. So you can see those lows are holding for now. Unless we see a hard reversal like this week, I'm really, really worried that we can see a lot higher yields.
With all this leverage that we have in the system.
Yeah. I don't know. So, and then that's only going to just fuel the fire to higher dollar yen. And, how many people have stood in front of the dollar yen and these yen pairs, for the last 500, 700 pips? Numerous people, myself included. I've tried it a couple times. Yeah, I found levels. And I've made money. Don't think that I haven't made money on the short side, but it sure is not easy. It is far from easy. And so and now here we are.
Talking about this yesterday, weren't we? I think when Tavi was running a bit late, we were speaking about how you, when you trade against the wind, you've got to know how to trade against the winds, and that's been
you cannot fart when you're trading against the wind, because it just goes back on your face and it smells.
You got to know how to trade.
Did I just say that? Did I say that? I did. All right.
It's a good great Bob Seger
beans. What? I'm sorry. I got off topic. You're trading against the wind. You said it. You opened the door. You opened the door, Ryan.
You don't go as big shorting dollar yen as you would go long and buying dips.
Yeah,
that's how you manage to trade against trends, and you know the risk each side of the bias.
Right. Yeah. That's That's it. And we kind of went into detail with this, just so you guys, just know we cover all these instruments here in top-down analysis in the Morning Edge webinar. This was done on Friday, and you can see the really usually where it says bias, you'll see some bearish, some bullish. Just depends on the market. Like right now, you can see everything else is range environment, but the dollar yen and dollar index is actually bullish. So we know that the bias is bullish. That means that if you are trying to trade counter trend, which I'm not going to sit here and say, oh, it says bullish, so I'm not going to short it. That's not necessarily true. You just know that if the bias is bullish, and we've identified that as a, because we all do it as a group. It's not just me doing analysis. It's I'm taking interactions from you guys too. As we're going through this analysis and we know that it's bullish, if you decide to short it, just know you're going counter trend and you're farting upwind, as Ryan would say. And so just take small positions.
I can't believe you said that out loud twice.
I did.
Yeah. You can own that.
So what's that?
You can own that. I'm not owning that.
All right. So anyway, we just talk about the dollar yen and just understand that, guys, we're in kind of levels that you got to just be really careful with at this point. And I'm going to be interested to see if there's any comments that come out of the whether it's the Ministry of Finance or the Bank of Japan. I mean, and I didn't catch the comments last night. I wasn't even paying attention to the markets yesterday evening at all, other than watch the euro a little bit, and I'm like, because that's where my exposure at. I wasn't actually watching anything regarding the yen because I don't have any yen exposure at the moment. So, all right, well, we have a few more minutes, and I wanted to say, those of you that attended the Trader Summit event, it was a really cool event. What was your favorite part of the event? Would you say, Stelios?
My favorite part of the event is Ryan interviewing people. No, he was really good.
I know what you're going to say.
Seriously, there's so many to choose from. I mean, Peter Schiff, I'm a huge fan. Mark Minervini, I thought, the way he talked, the way he described things, like I said on the summit as well, things which are not trading related. His shooting and other stuff, his drums and all that. And just the psychology part of it, and the Jack Schwager, of course. I mean, so many.
Yeah, it was great. How about yours, Ryan?
Yeah, I think one of my favorites was Mark Minervini. When you hear people like that, and when they talk about markets, it's like you're looking in a mirror, talking in a mirror, because they're saying things, and these guys are great, fantastic traders, and they're saying things about risk management and discipline and all that, and you're going, yep, tick, tick, tick. And, I do exactly the same. I looked at it. He was talking about his 50% win-loss rate, but he makes more on the ones he gets right than the ones he gets wrong. And I did the same. I looked at my stats, and I'm pretty much running the same thing, 50%, 51%. And I'm thinking,
wait. Ryan, look, you just said something. Check this out, guys. This is, you guys know, we've been running ForexAnalytix for how many years, Steve? 6 years now?
6 years, yeah.
It's going to be 6 years in July. Yes.
I'm really bad about that stuff. Like, you asked me how long I've been married. I'm like, I think 20 years, but, I think it's 19, and I'm really horrible at that. But I want to show you guys something. Go to close pattern and play. These are patterns in play, not from me, not just from me, from Stelios, from Steve, from Andre, Grega, Ryan, you haven't jumped in here yet, but this is a team effort. Look at the winning pip percentage over the last 6 years, 52.78%. Isn't that funny that you said that, Ryan?
Yeah.
Okay, go ahead. Sorry, this is our whole team pip percentage. So anyway, I just wanted to point that out because I think you're, again.
But
now
win percentage doesn't matter much. You can have
no,
30%.
but continue on, Ryan. Yeah, because you were saying that. I just needed to interrupt you really quick because I think it's so interesting.
It was the point about you make your winners pay more than your losers,
right?
And that that's what Mark did. And when I looked at my stats, I thought they were going to be higher because I make money. I thought, well, I'm going to have some pretty decent stats, but they're running still running around the 50-51% mark for winning days and winning weeks.
Okay,
and just the lot of stuff he said just resonates, and it gives you confirmation that what I'm doing is correct. And what traders need to do is list, because all the trades throughout, all the guys who were the decent traders on the event, all share exactly the same traits. They all talk the same way about discipline, risk management, all those sorts of things. So why is it
there was a couple of people said that they don't lose money, and I almost fell out of my chair. But anyway, I'm not going to talk about that. But you know what I mean? I was going to say, guys, we're running right into Dale's going to have an interview here in a second. But
you have a couple minutes.
Steve,
you have a couple.
I'm sorry,
minutes.
Dale.
You have a couple minutes.
Okay, Steve, what was your favorite part of the event? And by the way, Steve is really the behind the scenes. He's the mastermind. Like, he's the dude pulling all the strings behind the scenes. Like it's his puppet show. There's always that one person behind the scenes of an event like that actually is, really in control of everything. And, we all pass off the control to Steve because he is masterful at it. So Steve, well done on the Trader Summit event.
Thank you.
And what was your favorite part of the event?
I can't say. I have many parts of the event that I loved. Really, it's more than 5-6. So it makes no point. I'll start saying, and then it looks ridiculous because it's not a point. You know what I mean? We're lucky enough to have had an excellent lineup of speakers, which inevitably produced a plethora of highlights, I think.
Yeah, we did, and I should point this out because I should point this out because we didn't talk about it, but Mark Faber didn't show up, and that's weird.
Yeah.
It's really weird because he's been at our Trader Summit events before. I've interviewed him with Stelios before, one-on-one. Him and his staff always communicate with us, like, his assistant that he's had for years. We were emailing last week. Like, I was emailing her on Saturday, just the day before, and so I'm hoping he's okay.
We should actually reach out today.
I'm going to do that. Yeah, just to make sure everything's okay, because it's really not. It's very uncharacteristic of Mark. He's actually such a really nice person to deal with, and his assistant. She's always right on top of things. So it was strange. It was strange just to get ghosted, if you will. Anyway, I wanted to say that, anyway, but I want to thank everybody for being there and being around this last week. And Steve, we should get some recordings out to the folks, later.
We've already started working on them. We had a little bit of an issue that lost us a little bit of the morning. Some of the recordings were not as they were supposed to be, so we used some of the secondary recordings we had, but everything's on track now, and they're being worked already by the video editor. So
great.
The work has already begun.
Awesome. Okay. And Dale, you said we had a minute, or is your guest here?
I haven't been able to. I've sent him the link. It's asking me for a meeting ID or personal link name on the, I don't know why. He's having a hard time getting in for some reason. Asking me for a meeting ID or personal link. Do you know what that means?
I usually come in by the meeting number.
I just sent him the link that we have promoting this week's guests.
Yeah, that should work.
And he
said, there's let me.
It has worked for hundreds of people.
I know.
Dale, you here. Oh shit, that's not it. Oh yeah, I guess it is. There's the whole there's the whole invitation. Or I'm putting it on our.
I'm going to
chat.
put it there.
I mean,
give him a few minutes.
Oh, Ryan says there's the meeting number. Okay.
Yeah, that's how I usually enter.
Yeah.
That's in
Zoom
Skype.
is such it's such a common platform nowadays.
Yeah.
Just so you guys know, we were using Zoom before it was cool to use Zoom.
Yep.
Just so you all know. Yeah.
By the way, with the pandemic, it has become so popular that this time we actually didn't have to give people
instructions,
test calls. Until the previous event, we were like scheduling test runs with people, like a couple of days pre-event to make sure they're properly set up and they know how to do things. This time around, nobody needed it.
Oh, and while we're waiting, and while Dale's trying to figure that out, you guys were talking a little bit about precious metals. So silver broke this trend line here, as Stelios, I think, like literally cherry picked the low here at 24.
He did.
Yeah, he did. I think Stelios stepped away, right? Yeah, he's gone.
He went to count his profits.
Yeah, he cherry picked the low there, which was awesome at 24.01, which is what was it, like 2 weeks ago. But watch gold here, because gold actually broke out of this triangle late last week, and we just broke the 38% retracement. This is actually very important resistance that we're coming up to at this 1970 level. So watch gold here. I think we have to be a little careful with it. Gold could break higher above 1970. And, I after listening to most of our speakers, I was like, shoot, I need to buy some more gold. So that's all I was thinking after our event this weekend. I'm like, everybody's bullish gold. And, and then you hear everybody's reasons. And I already know all the reasons, but still it's like reinforces them all. And I'm like, damn, I need to go buy some more gold now and sell some dollars. But anyway, yeah, watch gold, because I think it's firming up here, and it's coming into some really, really key resistance that could allow for some, short covering, a little short covering squeeze, a little momentum playing. You might get some traders that take this up towards 2000. Any other last minute thought? Oh, it looks like Greg is here. Hey, Greg, we're missing our guest this morning, and well, he's trying to get in. Let's just put it like that. So, any thoughts coming into the new week?
Yeah, I think that this dollar yen is really moving into some very strong, important resistance here around 126, 127. I can also count 5 waves down on bonds. So I think that this market will slow down a little bit, probably this week, maybe ahead of the holidays season. So I would not be just too excited for this breakout on dollar yen.
Probably chasing up here, not the smartest idea.
Yeah, I wouldn't think so either. Yeah, go ahead, Greg.
Yeah, from February lows, we are seeing, I can count 5 waves up. So this makes me very worried here, and would not be surprised if we see a pullback at some point back towards 122. Around there.
All right. Well, and let me ask you this: Do you have just a minute to take over the charts and show what you're seeing in your 5-way down in bonds? That I'd like to see your look.
Sure.
All right.
And Gregor, since you are at it,
someone will have to stop screen sharing.
That would be
yeah.
There we go.
And Gregor, since you are at it, let's have a look at a longer term count of the bonds as well, besides the shorter term.
Yeah. Can you see charts?
Yes.
Okay, perfectly. So, well, here I think that we are approaching some very important support. Okay, I'm tracking potentially ongoing impulsive decline, but this is very strong support back from 2018. And notice that we have these 5 waves down within this wave 3, And even in this fifth wave, I can count
Extended.
5 waves up. Yes, down, sorry. So here we have this 5-wave structure, an extended drop. And that's why I think that we could be approaching some very important support levels in the near future. And as I said, dollar yen, okay, has 5 waves up. Here's this dollar yen. When looking at this move from January, okay, you can see that we are in a wave 5. So I would not be too excited regarding this breakout. Of course, I will be expecting much more upside, but firstly, I think that there can be a very nice pullback. As I said, 122, that's the former wave 4. So of course, you know, it's not much what you can do up here. I would definitely would not be looking for any kind of shorts at this stage, but as you said yourself earlier, I mean, it's quite a bit high here. So for longs, maybe too late a little bit.
All right.
Grega, longer than view, please.
On dollar yen?
No, on the bonds to begin with.
Let's take a look.
Because they haven't rallied with risk off at all, Grega.
Yeah,
do you think it's going to be accompanied by risk off? This bond rally? Or it's going to be bullish for equities?
I think more bullish for equities.
Because that's what they've been selling it off on, and if they get some relief on rates, that should help buoy things. That's what you think?
Yeah, I mean, I think that the equities are in a very deep correction here away from the highs, and I think that sooner or later we will catch a bit. And DAX has made a very nice upward reaction over the last few weeks. So I think that we are just now consolidating before we may see another raise higher. So here it is, Steve. I mean, I will be looking for a much higher degree ABC retracement, and looks like that we are, as I said, still probably in the first leg of this 3-wave drop. So I think that we, at some point, of course, we will rally, we will consolidate a little bit, but as it looks like right now, I just think that we have to be prepared on much more weakness after rallies.
So much higher rates.
I'll get ready for that low in 2031, Grega, where you have C.
Yeah, I mean, okay, let's go step by step.
Don't be busy that day.
Yeah. And also, if we consider dollar yen, I mean, this was a major triangle, and usually wave C will travel distance of 61.8% of wave A. So that's my minimum upward objection, of course, as set after pullbacks earlier. So that comes in around 134. Now, when you have wave C projects equal to wave A, well, that comes in around 150. Okay, but let's not get too excited regarding that. I think that of course, it's still valid technical target, but you know, a lot of things can change till then, and it may take, who knows, maybe years to get to this point. So, but at this stage, I think that this is obviously a bullish trend, but as I said, on the shorter term basis, we have these 5 waves up, and this suggests a pullback, while, as I said earlier, we are approaching this support here in on bonds as well.
Hey, Greg, the guest isn't going to come. You want to give the community a look at the metals, the silver breaking out?
Yep. Actually, I will look at gold.
Hey, this, and just so you guys know, before Greg, before you start, everybody, you guys should stick around. I mean, getting an Elliott, just getting an Elliott wave
they
count
should subscribe.
All of these, of all these assets. This is like golden stuff, guys. And remember, Grega is our Elliott wave specialist in the ForexAnalytix team. So you guys are getting quite a treat right now. Just letting you guys know. So make sure you stick around and listen up. All right.
Yeah, let's take a look. Sure, thanks. Let's take a look on gold. I mean, gold is clearly bullish. I will be expecting much more upside, but unfortunately, when everyone was expecting this major break to the upside when we traveled above 2012, usually this doesn't work so easily, right? So I think that we could consolidate a little bit further here to make this wave 4 maybe looking like a triangle. Even what's concerning here for me is this short-term picture. From that spike high back in March, well, we have these 5 waves down, right? and now you have only 3 waves up. So the first resistance is here at the former wave 4 and at the 38.2%. The second, much more important, would be around 2000, the 61.8%. So I think that this should be watched very closely. Usually when I see sharp reactions on Mondays, I cannot trust them much, and that makes perfectly to be this as a wave C of a 3-wave recovery here. Okay, so
right,
of course, so that's the short-term look, but I would be obviously expecting gold at some point to continue higher. But as I said, firstly, we had to complete this wave 4, which can be maybe as a flat, maybe as a triangle. You know, the big picture for gold, even if we go back towards 1,700, would not change. Okay, it would probably just done some long liquidations of longs, which at some point maybe should happen for this market to easily continue higher.
What would silver do under this, same scenario?
I think that silver is also in consolidation. Here, of course, I see much more upside potential. We are either here in a wave B or wave 2. Very strong support is around 2021. I'm not sure if this one would retest this level, but I'm certainly think that maybe later this year we could be much higher. But at least at this stage, I just think that it's time for more choppy price action. Because if you look closely here, if I zoom this in, well, you still have this some kind of 3-wave recovery, very nice deep pullback. Even if we see print a new highs here, well, it could be a leading diagonal from that point, and you will again expect some kind of a pullback. Maybe even big triangle could be playing out here as well. So the fact is that from December lows, I cannot count 5 waves up yet. Okay, so we have to be a little bit more patient here and just be aware that even this one could consolidate much more, of course, if gold will remain below that 2000.
You were a great guest.
We are done?
No. How about the dollar?
Yeah, let's take a look at Kiwi. I was short this pair, and I'm still in since last week. We've been looking for this wedge actually to send prices to the downside. It was a very nice divergence here on the RSI, which is very typical whenever we have this ending diagonal. And also keep in mind that at the same time, US stock market also turned to the downside. So I think that there is still, in the short term, there is room for more weakness on the S&P 500, and this could maybe send Kiwi even back to this March swing lows. If we look at the S&P 500, this is what I'm looking at right now. Now, 2 weeks back, we talked about this. I said that in the webinar that we have 5 waves up and that we should be aware of minimum 3-wave drop. So we are now seeing not a 3-wave drop, but looks like a 5-wave drop here for a leading diagonal. So it means that we will consolidate further towards lower prices. The next key support would be around 61.8%. But the first rally could occur here in the near term when you have this previous swing high March from start of March. This could provide some support for a wave B rally, but then just be aware of more weakness, and this could equal to more weakness on Kiwi and even Aussie dollar. If we have a quick look, even Aussie dollar, I think, is making at least short-term top. Let me just show you what I'm looking at now. Firstly, I want to look at this chart. Okay, so Aussie dollar was higher here back in March. Okay, but notice that copper didn't follow through, but even Chinese yuan hasn't seen a break to the upside, right? But all made these swing highs at the start of March. So afterwards, only Aussie has seen a push to a new high. But now even Aussie is turning to the downside. So I think that there is some downside pressure here. And as long as we are in a risk-off mode, I think that this Aussie dollar could easily continue much lower. If you look here at this one, you can actually see that there was a reversal from the highs, clearly in impulsive fashion. Okay, and you have dollar Chinese yuan now testing this trend line below. And if we can break this one higher, then I think that Aussie dollar will be much lower. I would be looking for potential head and shoulder stop formation here. So we'll be watching the next rally to sell into this next move lower.
Nice.
So this is what I'm looking at.
How about WTI? The view after this huge pullback in oil, are we completing something, or is this a continuation break that we may have under 100?
Yeah, I think that crude oil here is probably the cleanest picture. You have these 5 waves up, and honestly, I'm not sure if this is just a pullback within this 5th wave to see another push higher here, or are we already now consolidating? I just think that oil was very volatile. It will remain probably volatile, but it will come back. It has always been the case. So I'm prepared on a deeper pullback on crude oil, and maybe this one is already in the cards.
Mike Delfino would like to see your view of the Dixie, if you have time. Richard Adams says, me too.
Okay.
Me 3.
There's that number 3.
Okay, so looking at dollar index, okay, well, we are in a big consolidation, I think, and this is probably maybe a triangle. So I'm looking for a wave D rally. You're at the 78.6% now, around 100, very strong level. So I think that at some point we will slow down here, and ideally we will see this wave E setback. Also, this goes nicely with the potential support, as I said earlier, on bonds, and dollar yen could also be moving into this resistance with a 5th wave. So I think that markets will slow down, and just be aware that whenever we get this wave E, well, we could travel even all the way back towards 94, if not even lower. So yes, I know it's quite a tricky situation right now because we are still very bullish. But as you know, the ECB at some point will have to turn hawkish, and this will have a strong impact on the US dollar index if we'll see a bounce there. If we look at the euro dollar, you will see that actually we have their potential ending diagonal as well, or if you want, just wedge formation, okay, if you want to call it like that. So this one, I mean, if we print new low around 108, and if ECB comes very hawkish down there finally, well, maybe that's going to be a very big changer here regarding these flows in the upcoming months.
Okay, so the narrative is bonds completing, which will lead to lower yields, which could lead to a dollar correction, and gold, rather than getting all bulled up, it's only a 3-wave correction, and there's downside, and just, you know, if you don't want to short it, you're going to have better levels.
Gold is somehow, I would say, neutral. Okay, yeah. Just be aware that we could consolidate a little bit lower, but if we suddenly just print back above, if we see a strong break towards $2,070, then obviously I will have to immediately turn aggressively bullish.
Okay. Thank you so much for being around today, Greg.
Thank you.
Bailed me out.
Thank you for having me.
Bailed me out. It's always great to hear the wizard, isn't it? So everyone, have a great day. Like I said earlier, if you were at the conference, I'm sure there were some themes that resonated with you. Try the trader funding program and have the capital. It takes money to make money. Okay, I always trade better when I have, you know, it's not life or death on every trade. So that's where I'll leave it with you guys. And thank you, team. Great effort over the weekend. I know what it's like, and hope you recover quickly. And let's have a great April. Still have plenty of time to have a great April before we pay our taxes in 4 days. So good hunting, and don't just count your pips, count your blessings. And we'll see everyone. We'll see everyone tomorrow. Thank you, Ryan, Blake, Stel, Steve, the whole team. Best team on the net. Who agrees with me? Who agrees? Okay, there. Okay, Sinatra. All right, guys, have a great day. Good luck. And the morning edge in 20 minutes, 21 minutes. All right, guys. Adios.